the fact that we've worked our way from individuals to high net worth individuals to private companies up to, the tech innovators, and now we're working on the mega public corps and the banks, right? That's a sign of the asset improving. So with exponential processes, there's a whole lot of nothing apparently going on as the process builds and builds. And all of a sudden, there's a little blip. And then all of a sudden, you have more action, right? Like with Apple stock, right? It took forever, 40 years to make it to $1 trillion. And it took like 18 months to make it to $2 trillion. It's like, but you see that as a phenomenon. And that's the phenomena here organically.
Michael Saylor, founder and executive chairman of MicroStrategy, believes we have entered a new era for Bitcoin, an organically viral phase that will drive explosive growth for the leading cryptocurrency. According to Saylor, Bitcoin has rapidly evolved from being seen as magic internet money to a massive trillion-dollar asset, gaining acceptance from major corporations and multinational banks worldwide. Once considered adversaries, U.S. banks like J.P. Morgan, Goldman Sachs, and BNY Mellon are now seeking to provide custody services for Bitcoin and Ethereum to their affluent clients. BNY Mellon, one of the largest custodial banks globally, is pursuing regulatory approvals to enter the lucrative crypto custody market. A representative from BNY recently stated that the bank is actively engaging with regulators to expand its custody services for cryptocurrency exchange-traded products. Saylor, who has an optimistic prediction of $13 million for Bitcoin by 2045, sees this as just the beginning of significant developments for Bitcoin and the broader crypto landscape. He believes that regulatory barriers are gradually falling, paving the way for not only institutional investors, but also massive corporations like Apple and Microsoft to invest in the future of finance. In a recent interview with OnRamp Media, Saylor emphasized that this moment could fundamentally change the global financial industry and how investments are made. We'll now share clips from Saylor's interview where he discusses this new era of explosive growth for Bitcoin. But first, please take a moment to like this video, subscribe to the channel, and turn on notifications for more content. Thanks, and enjoy the video.
I think the three big planks of corporate adoption of Bitcoin are number one, fair accounting. And we started with indefinite intangible accounting, and we get fair value accounting in January of 2025 that's mandatory. So there's been about a 4-year period of normalizing the accounting. I think the accounting is hostile and prejudicial to a well-run company. Just because if you can only lose money and you can never make money on an investment, a reasonable CEO or CFO would say, I don't know if I want to make that investment. And so even though the reality is you would make money on an accounting basis, it would look like you're losing money. So I think that was the first challenge. The second challenge is fair treatment as an institutional asset, via the Securities and Exchange Commission or the major financial regulators. And we started to get that January of 2024 with the approval of the spot Bitcoin ETFs. And before that point, a lot of skeptics were of the opinion that maybe it would be banned, or they're not sure it's an actual real asset. You have all the skeptics saying it's tulip bulbs or it's a Ponzi scheme or something. But of course, the SEC would never approve an ETF for a Ponzi scheme. So probably for people that don't really think hard one way or the other about this, they're reflexive investors, they're looking for that endorsement from the most important financial regulator in the world, or regulators in the world. So that was plank 2. And I think plank 3 is fair treatment from the banking system. So right now, it's impossible for most major banks to custody Bitcoin, buy Bitcoin, or sell Bitcoin for you. There are a few banks in Switzerland. I mean, there's Standard Chartered Bank in Europe. There are some of the banks in Brazil that can handle the asset. But the major corporations, right, the Microsoft, the Google, the Amazon, the Apples of the world, they wire billions of dollars a month to a too big to fail bank, right? A bank with $1 trillion balance sheet. And right now, they wire the billions of dollars a month to buy sovereign debt. They're just saying, okay, take this $1 billion today and buy T-bills with it. And it's like a 10-second transaction. It's routine. They've been doing with the business with the same bank for 30 years, 40 years. Citi is National City Bank. National City Bank was the bank of John D. Rockefeller, run by his brother. Okay, that tells you how far back. J.P. Morgan, right? Try to remember who founded J.P. Morgan, right? And how far back it goes. J.P. Morgan wasn't the first, right? He took it over. So what you have are these 100-year-old banks and 100-year-old relationships. And at the point that a CFO can send $1 billion of cash to their bank, buy $1 billion of Bitcoin, do it and hold it there, no risk, right? Or what they perceive as no risk, right? These are too big to fail banks. So the shareholders of Apple and the shareholders of Microsoft, they're not obsessing over the risk that Apple and Microsoft take to do business with Bank of America or JP Morgan or Citi, right? Or Wells Fargo. So that's a very important thing. When you've got all three, when you've got fair accounting, when you've got fair, securities treatment or trading treatment, and when you've got fair banking treatment, then you'll see mega corporations that will think, okay, well, this is a reasonable thing to do and it's practical to do. Until you've overcome those three, then you've got problems to solve.
During his interview, Saylor discusses the Bitcoin 24 model, an open source macro model designed to forecast asset growth and Bitcoin adoption over the next 21 years. This model includes micro models to assess various Bitcoin strategies for individuals, corporations, institutions, and nation-states. It outlines how Bitcoin could perform in this time frame, presenting both a base and a bull case, similar to Saylor's $13 million base case prediction for the leading cryptocurrency. Earlier this year at a conference in Nashville, Saylor provided his macro Bitcoin forecast for 2045, presenting a bear case, base case, and bull case for the leading cryptocurrency. In the bear case, he anticipates Bitcoin's price could increase at least 4,300% from its current price of $68,000 to $3 million per coin. In his base case, he predicts Bitcoin could reach $13 million by 2045, representing a staggering 19,000% increase from current levels. This would elevate Bitcoin's market cap to $280 trillion, a 280-fold increase from its current market cap of $1.3 trillion. Saylor reiterates this prediction during his interview with OnRamp Media, asserting that no other asset class or business model is likely to match Bitcoin's expected rate of return in the coming years. Here are more clips from the interview.
What I think is Bitcoin is the risk-free return for a Bitcoin maximalist. So just start there, right? Bitcoin is the risk-free return. And the question is, do you want to take risk or not? Right? So, and I asked this question, like in my personal life, like we've created the Bitcoin 24 model. The Bitcoin 24 model is based on a lot of your work, Jesse. You'll find we started with your work and then we created it. We put it in the public domain. And the Bitcoin 24 model, you can go Google it and find it on GitHub. I think 20,000 people have grabbed it, since I tweeted it. And in it, you've got all of the assumptions about the macro environment. You can crank in your own inflation assumptions, your own innovation assumptions, your own monetization and demonetization assumptions about gold and art and real estate and bonds and currency. And then you can put in all your own Bitcoin growth assumptions and create a bull case and a base case and a bear case. And then after that, there are micro models. And so you can model your family and decide, do you want to move to UAE or not? And how much money can you generate and when? And how much assets do you start with? And you're going to inherit money from your rich aunt and what. And then you could decide, if you can mortgage your house or not mortgage your house. And so you've got a micro model, and it's also got a corporate model. And, if you're a corporation, you can crank in your corporate model. You can also build your own. I mean, it's an open spreadsheet. Just grab the thing, duplicate it, and be off to the races. And you can create a institutional model. Look, the answer is different if you're running Harvard's endowment than if you're running, the Myers Family Trust, than if you're an individual, than if you're a Bitcoin miner, or if you're an operating company, or if you're a bakery, or if you're Tahini Brothers, right? I mean, everybody's got their own thing. So that model is very open, but what I've done is I cranked in my assumptions and I have presented my base case and in Nashville, and my base case is Bitcoin goes to 13 million a coin, and it's the ARR of 29% ARR over 21 years. It's like you don't have to accept my assumptions. Make your own. Just go down. If you can use a spreadsheet and type in numbers and hit save, you can do your own model for the next, and you can do it in 10 minutes, and you'll generate lots of beautiful graphs, and you'll decide whatever you'll decide. But if we start with my base case is the risk-free return is 29% ARR for 21 years, which means that when you pitch me an idea, if you come to me and say, hey, I got a new Bitcoin custody thing, or I got a new hardware wallet, or I got, a new Bitcoin whatever banking thing, or I got a new whatever. I'm like, well, so can you guarantee me 29% plus the risk premium, which is probably 8%, 6, 8, 10%. It's like the risk premium on a mega corporation like Disney or whatever is 4 or 5%. And the risk premium on a small startup has got to be 20%. Okay. And so if you pitched me an idea and said, okay, I guarantee you 40% ARR for the next 21 years. And I'm like, and is it going to be capital free? Like I don't have to bother with it, and I don't have to put any more money in later. You're like, well, if you promise me all that stuff, I would like, okay, well, let me think about it. But probably if you gave me 10 of those ideas, I probably still don't want them, because it's just a distraction. Because my view is 29% ARR risk free.
Hello guys, welcome back to my channel. Today I am back with another new video. In this video, Michael Saylor has discussed about Bitcoin. He described as a Bitcoin is the main.
Watch out!
How Bitcoin could be the best asset in the world. According to him, Bitcoin is not like other fiat currency, because currency and other currencies are depend on governments, but Bitcoin is individual.
Help!
Guys, if you like cryptocurrency related content, then you can subscribe my channel, because I daily upload this type of video.
Help!
Guys, if you like Bitcoin related content, then you can subscribe my channel. Guys, now I am playing BGMI gameplay. If you like this type of gameplay, then you can subscribe my channel because I will back with another gameplay next. Bye for now. If you like Bitcoin related content, then you can subscribe my channel and watch my video because I upload daily this type of video.